All right, good afternoon, everyone, and welcome to today's Lunch with Mia from the Maryland Insurance Administration. My name is Thomas Aloisi, and I'll be the moderator for today's event. May is Older Americans Month, so this 1 hour Lunch with Mia will cover 3 issues that may be of interest to older Americans, and Marylanders specifically. The issues are the reasons to maintain your homeowner's insurance after you've paid off your mortgage, a brief review of Medicare and Medicaid or Medicare supplement products, and the third issue is insurance fraud. We will also spend some time giving you a brief lesson in using our website. I want to remind you that this event is being recorded. Please keep your cameras off and your mics muted. So first up is Kiana Watson, who will discuss the importance of homeowners insurance. Take it away, Kiana.
Thank you, Thomas.
And House Speaker Kevin McCarthy had been sharp words for each other. We didn't see
I'm muting everyone.
In fact,
So good afternoon, everyone. We are celebrating Older Americans Month, and I'm going to talk a little bit about why it's important to maintain your homeowner's insurance. So this presentation does not provide legal advice. You should discuss specific questions with your trusted financial advisor or insurance producer. So let's start off with homeowners insurance. It's still important even if you have paid off your mortgage. So first, a little bit about the Maryland Insurance Administration. The Maryland Insurance Administration is the state agency that regulates insurance in Maryland. This means that we are the agency that licenses insurance agents, brokers, also known as insurance producers, and the insurers. We examine the business practices of the insurance companies, and that's just to make sure that they are complying with Maryland law. We monitor the companies, and that's to make sure that they are able to pay your claims. We review and approve all insurance policies sold within the state. We review insurance rates to ensure rates are not inadequate, excessive, or unfairly discriminatory, as well as we investigate consumer and provider complaints and allegations of fraud. So you've paid off your mortgage, and with that is an exciting thing. But with that, it comes with new responsibilities. When you first purchased your home, your lender likely required you to pay extra money each month to an escrow account. And that was to pay for expenses such as your homeowner's insurance as well as your taxes. As the sole owner of your property now, you are now on your own to cover the cost of homeowner's insurance. Next slide. Your lender had the right to take possession of your property if you failed to make your mortgage payments. Homeowners insurance protected the lender's financial interest in your property. So while maintaining homeowners insurance after you paid off your home is not state or federally mandated, it is important. It is something you need to think about carefully about before canceling your insurance. So your home is likely your largest asset. Homeowners insurance is there to pay for damages covered under the policy. Most people do not think about homeowners insurance until they have a reason to use it. And although we know that fires, theft, and other accidents occur, we tend to think odds are that will never happen to us. Unfortunately, if you experience a loss and you don't have insurance, your finances may be ruined. Next slide. So we often think of insurance as paying to rebuild after a fire. So think about a smaller loss, such as a pipe busting or your roof being damaged by wind, and how much these expenses would cost you without a homeowner's policy in effect. So would you have the money to repair your home if those losses are in the tens of thousands of dollars? What would you do and where would you go if tomorrow your home was uninhabitable due to a loss? So if you are still maintaining homeowners insurance coverage, contact your homeowners insurer or your insurance producer. It's important that you provide the documents they need to remove your lender from your insurance policy. Your lender is a named policyholder on your contract while you have a mortgage, and thus will be entitled to payment if you filed a homeowner's insurance claim. If your mortgage is paid off, this money would eventually find its way to you, but having the lender's name removed from your policy in advance can save you frustration and delays in any already stressful time. So again, if your homeowner's insurance is paid, if your mortgage is paid off, you want to make sure that your lender is removed from your policy. So Maryland Insurance Administration Homeowners Insurance Rate Guide. If you have let your insurance lapse or you are interested in shopping for a new policy, comparison shopping is the key to getting the most out of your insurance dollar. Shop around. You may be surprised at how much less you can pay with another company for the exact same coverage. So don't forget, you want an apples to apples comparison. Make sure the quotes you get are for the same type of coverage. Next slide. So you will be able to find our brochure for comparison guide to rates for homeowners on our website, or you can call us on the number listed on the slide, 1-800-492-6116 to request a copy. Next slide. Here is a picture of exactly what the rate guide looks like when you get on our website. Again, it is a homeowners and renters insurance comparison guide to rates. Next slide. Okay, so shopping for homeowners insurance, what else do you need to know? So you want to know the difference between actual cash value and replacement costs, also known as ACV and RCV. So actual cash value is the cost to replace the damaged property with like, kind, or quality. But with actual cash value, they will minus depreciation for age and use. If you have replacement cost value, again, also known as RCV, is the cost to replace the damaged property with like, kind, or quality at full cost without depreciation, less the amount of your deductible. So again, with the replacement cost and the actual cash value, the deductible is taken out of the cost estimate amount. Next slide. So deductibles. You may have many options when choosing a deductible. If you choose a policy with a $500 deductible, there must be $500 of coverage damage to your home or personal property for each claim before you're entitled to collect any money from your insurer. Your insurer will deduct the $500 from the total amount of covered damage. Higher deductible reduces your premium. So again, the higher the deductible, the cheaper your premium will be. Choose a deductible that you will be able to afford to pay out of pocket if you have a claim. You can ask your insurer or insurance producer how much your premium will be reduced by increasing the amount of your deductible. Some homeowners policies contain special percentage deductible for losses caused by specific perils such as wind, hurricanes, or other storms. The insurer may automatically include these deductibles or make these deductibles available at the option of the policy holder. Always ask your insurer or insurance producer if your policy has a flat deductible or percentage deductible. Percentage deductibles are based on your dwelling coverage limit, not the amount of your loss. So an example is given below. If your dwelling is insured for 100,000 and your policy has a 2% deductible for certain perils, so again, the perils will be the covered losses such as the wind, the hurricanes, or other storms, then your deductible would be $2,000 with a 2% deductible. Next slide. So if you have been turned down by one insurer for homeowners insurance, try obtaining coverage through another insurer or other insurers. Do not assume that you will be turned down by all insurers. Just as insurers have different premiums, they also have different underwriting requirements. So call around and keep trying to obtain an insurance policy. Again, that's where our rate guide would come in handy because it would list all of the insurance companies along with their estimated rates, premiums. So if you are unable to obtain insurance for your home from a private insurer, limit insurance protection may be available through the Maryland Property Insurance Availability Program, also known as the Joint Insurance Association, JIA. This is the address as well as the phone number and their website where you can contact them. Next slide. So no one likes paying for insurance, but the consequences of not having it can be devastating and quickly erase the good decisions you've made in the past and the hard work that you will put in for paying off your home. Next slide. All right, so that was the end.
Thank you, Kiana. There's some great information there. Next, we'll turn to Patty, who will discuss Medicare and Medicare supplements.
Hi, everyone. I'm Patty Dorn, also with Maryland Insurance Administration. Thanks for being here today. I'm going to talk to you about the Medicare supplement in Maryland. I'm also going to do an ABCD of Medicare. This is going to be a quick version. This is going to be about 15 minutes. On June 20th at 11 a.m., I'm going to do a Medicare supplement in Maryland, longer version, 75 minutes. So if you don't get all the information that you want here, shoot me an email at patricia.dorn@maryland.gov, and I will send you the flyer for the information on June 20th at 11 a.m. So let's go ahead and get started with Medicare supplement in Maryland. So Medicare Part A. Let's understand the ABCDs of Medicare before we get into the supplement. Part A is your hospital insurance, also known as hospital insurance or inpatient insurance. So Part A is covering those costs when you're hospitalized. Part A is funded by payroll tax, FICA, and most people with a personal or spousal work history and who've paid into Social Security do not pay for Part A. So if you've worked for 10 years or more, you're probably not going to be paying a premium for Part A, or if you're married to somebody, if you've been married to someone who has as well. So most people end up getting Medicare Part A for free. It covers care in a hospital, some costs of skilled nursing facilities, home health services, as well as hospice care for the terminally ill. Next slide, please. And I do want to apologize if there's any problem with my sound going in and out. It has been a little bit of an issue lately. So Medicare Part B, this is outpatient insurance. This is going to cover those outpatient type costs. Part A and B together are referred to as traditional Medicare or original Medicare. So if you hear those terms, and you do sometimes on commercials, etc., it refers to that Part A and Part B together, that information that's on your red, white, and blue card. Part B is funded by Part B premiums, which you pay. In some cases, you don't have to pay them if you get financial assistance, but it's also funded by general revenues from the federal government. So it's not just the Part B premiums that are covering the cost of running the program. It's also general revenues from the federal government. Part B covers doctor services. It covers lab tests, medical equipment, ambulance services, prevention and wellness screenings, orthotics, prosthetics, and mental health services. with regards to Medicare Part B, there is a permanent penalty for late enrollment. So if you're qualified to start taking Medicare Part B when you turn 65 and you don't have another insurance, so you're not working and you don't have another form of insurance, if you do not start paying the premium for Medicare Part B, sign up for Medicare Part B and start receiving Medicare Part B, you can be penalized 10% of the base premium for each year that you delayed enrollment. So if you delayed enrollment for a year, and then the next year when you were 66 years old, you signed up, you could be looking at a 10% penalty. So you'll be paying 10% more than everyone else for the premium. And the thing about these penalties is they carry for your entire life. So you'll always pay that 10% penalty if you're penalized. If you went 2 years, instead of signing up at 66, you signed up at 67, you'd be looking at a 20% penalty. And again, those do carry on for your entire life. So that is an FYI to you. Next slide. Medicare Part C. This is the Medicare Advantage plan. And so I'm going to step back for a second and make sure that we're all on the same page here. A, B, C, D of Medicare. So Medicare Parts A and B, that covers about 80% of the costs of your inpatient and outpatient care, about 80%. So most people need to get something to cover that other 20%. And there are 4 common ways to do that. The first way is going to be some people have retiree benefits. So those retiree benefits pick up that 20%. Another group of people qualify for either Medicaid or they qualify for the Quimby Slimby program. And these are programs that can help them cover that 20%. So that's another group of people. And then the others are looking at, should I go with Part C, which is Medicare Advantage, or the Medicare Supplement? And so I'll get into the Medicare Supplement a little bit more, but this is just a really quick 1-slide Part C. So Part C, that's one way of covering the 20% that isn't covered by A and B. And that is also known as Medicare Advantage. These are plans offered by private companies under a contract to provide A and B coverage, and they usually cover D. Okay, so if you sign up for a Medicare Advantage plan, it's like you've bundled everything. You've bundled A and B, that 20% that's not covered under A and B, and in most cases, you'll get the drug coverage with the plan as well. Although you want to make sure, because they can offer the plans without drug coverage. So they may offer additional benefits. The Medicare Advantage plans have, a lot of times they have bells and whistles. They have vision coverage that isn't covered under Medicare, dental coverage. It could be gym memberships. It could be all kinds of things. They can design these programs in all kinds of different ways. You still pay the Part B premium. So with Part C, there is usually, not always, a premium. And then you do pay the Part B premium as well. So that is just an FYI to you. There may be additional premiums, deductibles, and co-pays. This varies by company and by plan. You can find this information on medicare.gov under health plans if you want to explore what Medicare Advantage plans are available to you in your zip code. Next slide, please. And D is in drug. This is prescription drug coverage. It's provided through private companies, either as a standalone plan or as part of Part C. So remember, Part C, Medicare Advantage. There's no pre-existing condition clause. They must accept anyone who's eligible. Just like with Medicare Part B, you may incur a permanent penalty for late enrollment in D. So if you don't sign up for D when you are eligible for D and you don't have some other form of credible insurance coverage, then you could incur that permanent penalty in the same way that you can with B. It's important to know that different plans have different costs and formularies. In Maryland, last I looked, there were 35 of these Part D plans that are offered, and each one of them is going to have a different list of drugs that they cover and different co-pays, costs out of your pocket that are associated with those. So it is important to make sure that you choose the D plan that works for you. The website medicare.gov does try to make that pretty user-friendly. You can put in your information about your drug coverage, the dosages, the frequency, etc. And then what Medicare.gov will do is after it gets that information from you, it's going to order the D plans from least expensive out of your pocket to most expensive. Now, I just want to caution you, that doesn't necessarily mean that the cheapest one is best for you. Think about the pharmacies that you go to and things like that, but just know that Medicare.gov does have the ability to do that for you. The annual enrollment, open enrollment for Part D is October 15th to December 7th, and that is the same as Part C. Both of them are October 15th to December 7th. And like I said, I know this is fast, it's a lot of material, and I know this is the right amount of material for some people, but if you want to join me for a longer presentation, June 20th. Next slide. So a review of Medicare, the Medicare supplement. The Medicare supplement is a product to supplement original Medicare. So what is it doing? It's helping you pay some of those costs that are not covered under that approximately 80% that A and B is covering. All right, so it's picking up some of the costs of that additional 20%. It pays for cost sharing for A and B, but not for D. If you purchase a Medicare supplement, you probably also need to purchase a Part D plan as well. Medicare supplement plans are purchased from private insurance companies. There's 12 standard plans that are sold in Maryland. There is no annual open enrollment period. Okay, so this isn't part of the Medicare open enrollment, October 15th to December 7th. With the Medicare supplement, in the first 6 months after you sign up for Part B, after you start on Part B, you get an open enrollment period where you can purchase without underwriting. There's also starting July 1st, 2023, there's something called the birthday rule where you can switch plans without underwriting. And if you join me for that presentation on June 20th, we'll go over that. I'll also show you where you can find that information on our website as well. Next slide. All right. Is a Medicare supplement plan the same as a Medigap plan? The Medicare supplement and Medigap refers to the same thing. And I know that is super confusing. Some entities call it Medicare supplement. That's what we call it in Maryland. The Maryland state government, we're referring to it as the Medicare supplement. But there are entities that say Medigap, and they are referring to the exact same product. Do Medicare supplement plans cover prescription drugs? So they do not. Some of the older plans sold before 2006 do, but after that, they are not allowed to include prescription drug coverage. Next slide. So the Maryland Insurance Administration regulates the Medicare supplement. We are the insurance regulator in Maryland. We do not regulate Medicare Advantage or Medicare Part D plans, except for solvency. So except for making sure they have money to pay your claims, and producer conduct. That means that if someone sold you a Part D plan or a Medicare Advantage plan, and you have a complaint against that agent or broker, you can come to us and file a complaint. But if you have an issue about a claim that's in progress, etc., you cannot go to the Maryland Insurance Administration for the Medicare Advantage or the Part D plans. You should follow their process for filing a complaint. With regards to the Medicare supplements, we regulate them. We review the policies that are issued, we review the rates, and we take your complaints. So if you have an issue with the Medicare supplement product, you can file that complaint with us. Next slide, please. Can the Maryland Insurance Administration help if I have questions about parts of Medicare besides the Medicare supplement? For the most part, beyond the Medicare supplement, we encourage you to go to SHIP. So SHIP is the State Health Insurance Assistance Program. There's a link at the bottom. Each county and Baltimore City have a separate entity. You can contact them and you can get that help. They can help you fill out forms. They can help you apply for financial assistance. They can help you make a determination between one Part D plan and another. They can help you make a determination between Advantage plans. They can really fully step you through the process. You are welcome to come to me with your Medicare supplement questions, though. And you can always go to CMS, and you can always call 1-800-Medicare as well. Next slide. All right, so another quick overview. The Medicare supplement plans are standardized. They are identified by a letter. An A is an A is an A, a B is a B is a B. No matter what company you're purchasing it from, it's the same product. It is important for you to remember that Medicare itself has parts A, B, C, and D. We just reviewed them, right? A for hospitalization, B for outpatient. The Medicare supplement plans have plan A, B, C, D as well. So that's confusing. But just know that that's different, right? Medicare parts A, B, C, D, Medicare supplement A, B, C, D, not the same thing. So all the plans have the same basic benefits. And what that means is that an A has the same basic benefits no matter what company you purchase it from. All the companies, they don't have to sell all the plans, okay? So some companies might only offer A and F. Another company might offer all of them. So all the companies don't offer all the letters. There's some plans that are no longer sold, but people are grandfathered into them. And then C and F, so Medicare Supplement C and F, those are available for purchase only to those eligible for Medicare before January 1st of 2020. So if you became eligible for Medicare January 1st, 2020 or later, you cannot purchase Medicare Plan C and F. If you are a person who became eligible for Medicare in 2019, but you continued working until this year, and you're just starting to take Part B, because you became eligible before January 1st, 2020, you are allowed to purchase C and F. And again, if you have any questions on that issue, you can email me or you can reach out to your SHIP. Next slide. This is a little chart. I think it's a little bit helpful. The standardized Medicare supplement plans. Just a couple things that I would like to point out to you. If you look at C and F, you will see that they are the only two plans that cover the Part B deductible. Okay, and so that's why they are the plans that are only available to those eligible before January 1st, 2020, because from that date on, new Medicare beneficiaries cannot purchase Medicare supplement policies that cover that Part B deductible. And so that's why that distinction is being made by me. The Part B excess charges, it's important to understand what that is. A provider who takes Medicare can either accept assignment, they can accept Medicare assignment, or they cannot accept Medicare assignment. If that provider chooses not to accept Medicare assignment, then they can charge up to 15% more. Okay, so for your doctor visit, for your procedure, et cetera, up to 15% more. That is the Part B excess charges. And only F and G cover those Part B excess charges. So it's just something to be aware of. If you choose a Medicare supplement plan that doesn't cover the excess charges, then you need to be more aware. Ask your doctor, do you accept Medicare assignment or not? And then you'll understand if you could see that extra 15%. Plans F and G do have a high deductible option. That deductible for 2023 is $2,700 per year. And Plan N requires a $20 copayment for office visits and a $50 copayment for emergency room visits. Next slide. Rate guide. We publish a rate guide. We publish it every January and July. It is a snapshot of the rates in essentially on one day. Medicare supplement insurance carriers, they can come to us and ask for a rate increase once per year, but at any time. So at any time, if this is published July 1st and that company comes on August 1st and we give them a rate increase, it may not be exactly the rate. It's a snapshot in time twice a year. It's going to show you the discounts that are available. If you move out of Maryland, you can probably keep your Medicare supplement plan and your rate. However, you need to contact your insurer and make sure that that's the case, because in some cases you won't be keeping it and you'll be rated on your new address. If you move to Massachusetts, Minnesota, or Wisconsin, they do not have standardized Medicare supplement plans, and you are going to have to purchase a new Medicare supplement plan. They will give you a guarantee issue period, though you will have 63 days to change without underwriting. Next slide. All right, so like I said, I'll do a longer version of that, but I think that, that could have been enough for some of you. If you do have questions regarding the Medicare supplement or any of that stuff that I went over today, shoot me an email at patricia.thorn@maryland.gov, and you will see that information in the chat. I'm going to pass it off now again to Kiana.
Thank you, Patty. Next slide. So I'm going to go into a little bit about insurance fraud. So what is insurance fraud? So insurance fraud is when an insurance producer, adjuster, or consumer commits a deliberate deception for financial gain. Insurance fraud is one of the most costly crimes in our country and can cost anywhere from $40 billion per year nationally. So according to the Coalition of Insurance Fraud, it is estimated that each household pays approximately $1,000 extra in insurance premiums each year to offset the cost of insurance fraud. So committing insurance fraud can be civil or criminal prosecution, jail time, penalties as high as $10,000, or jail time and penalties. Next slide. So for older adults, they are often targeted for insurance fraud, particularly in regard to life and health insurance. So there are certain things that you should be leery of when it comes to a salesperson or certain telephone calls. So if they contact you unsolicited, the salesperson probably has obtained your information through a mailing list, uses high pressure tactics. So common tactics include offering a last chance deal or limited offer, or attempting to pressure you to sign forms without you actually reviewing them. Next slide. So there are some things to be wary of. Urges you to cash in an existing annuity or life insurance policy to buy a new annuity or a life insurance policy or other investments. Generally, annuities and life insurance are worth more the longer you keep them. So changing to a new annuity or policy may cause you to lose money over the first 3 to 5 years. You also may be charged a penalty if you withdraw money from your annuity too early. Discuss the tax consequences of early withdrawal with a tax advisor. Claims to be from Medicare, Social Security, or other government agencies are also tactics that they may use. An insurance producer or broker who claims to be associated with the government is actually breaking the law. Wants to sell you a package policy that includes several different benefits, some of which are duplicate policies you already may have or are included already in your coverage. Next slide. Wants you to pay cash or make your check money order payable to them. Never pay with cash and always request a receipt. Wants you to sign forms that contain false or incomplete information on a blank document. Wants to fill out the forms for you. Make sure you read over and understand all of the forms. If you are unsure whether an insurance producer makes sense to you, reach out to your friends or family or from a trusted accountant, attorney, or financial advisor before making any insurance purchases. Next slide. So you are encouraged to report insurance fraud activities to the Maryland Insurance Administration Insurance Fraud Division. You need to not give your name, simply call. Again, the number's on the slide, 1-800-846-4069. Consumers may also send emails. Again, the email is on the slide. And you can also send a form or completed form for fraud form to the email provided. Next slide. And here's our contact information. Again, you can contact us if you suspect fraud or if you have any general questions in relation to fraud. Next slide.
Hi, everybody, I'm back. So I am now, thanks, Kiana. And thanks, Thomas. I'm going to step you guys through a couple. I'm just going to show you our website so you're comfortable using the website. But a couple other things I want to say about fraud from just an email that I received this morning. Just make sure that you are cautious about giving your bank account information over the phone. If somebody calls you from a government entity and you're not expecting the call, that is probably fraud. Be really, really careful. Verify anyone that you are tempted to give your personal bank account information, etc., over the phone. Get the information from them. Call, verify by getting a legitimate phone number, and just make sure that you're not giving out that bank account information from your checking account number, from your debit, from your credit card, etc. The other thing is, don't rely on caller ID. I think most of us know that that's pretty easy to spoof at this point. Like, I've started to get calls from people accusing me of calling them. I don't know if that's happened to some of you as well. But not only are they spoofing numbers from Bank of America or etc., they're spoofing our numbers as well. And so, just be careful. Don't rely on caller ID for sure. So I'm going to go ahead and I'm going to share with you just a little bit of tips on using our website. That way we try to make it consumer friendly. I think it is helpful to show you how to use it. So you should see the site up on your screen. It does say participants can see my application. And so this is our website. If you want to file a complaint with us, that is right there at the top. We try to make that easy peasy for you. Click here to file a complaint, and I'm going to go ahead and click on it and show you a few things. If you are comfortable filing online, you're going to click this little yellow highlighted link right here, and that is going to take you into our portal where you can actually file online. And of course, that's not for everybody. You're certainly allowed to snail mail in your complaints, etc. But this just gives you an easy opportunity to step through here and file your complaint online. It's not letting me go back. So if you choose not to, or you want more information about different kinds of complaints, right down here. If you have a complaint about auto insurance, homeowners, health, long-term care, it's kind of all separated out so you can read more about this. If you want to know more about the rapid response program here, that is a program, scroll down. The Rapid Response Program is designed to help certain consumers resolve property and casualty complaints. So for the most part, these are your auto and homeowners claims. We're trying to resolve these issues quickly and without having to go through the formal written complaint process. And so if that is something, when you file your complaint will ask you if you're interested in going forward with this rapid response program, or you can also contact us if you want more information about the rapid response program. If you are interested in seeing our collection of videos and webinars, there's a link right here. You can click on this, and this will take you to, for example, this will be posted on this page within the next day or two. So if you wanted to review this of a podcast, we have a few of them recorded already. And if you come down to the bottom, you see the webinars and videos by category. You know, so if you're looking at older adults information, we have a category for older adults, and this is where this will be filed as well. You know, separated into different topics, etc., where there's webinars, but there's also videos. If you are just looking, if you came to our site to find more information, say you came to our site to find more information about homeowners insurance or the Medicare supplement, I recommend, there's a couple different ways to get there. I usually go to the top because I use this website just like you guys do to download information, etc. I usually click on the consumer link and it takes me over here to this page. And then I see all the different insurance topics. So just for starters, if I want to know more about annuities, I can see our consumer guide to annuities, information about the Life and Health Insurance Guarantee Corporation, and the video that we have, Annuities 101 video, will also be there as well. And so it's also another place to access videos. With regards to the Medicare supplement, which, you know, I touched on for 15 or 20 minutes, but it's a big topic. It is a huge topic. So there's more information here as well. We have a frequently asked question. We have the monthly premiums for the Medicare supplement policies. You'll find that information there. And then what I sort of alluded to, but didn't get into more details, this consumer advisory, Maryland law allows for an additional open enrollment period for the Medicare supplement policies. And again, I will go into this in detail on the 20th of June, but the Maryland law now allows for an additional open enrollment period for the Medicare supplement policies. So what that means is before you only had that 6 months. So you started out, say you started on Medicare Part B, let's say you started on January 1st, you've got 6 months where you can purchase a Medicare supplement policy without underwriting. Beyond that, unless you qualified for certain special enrollment periods, say you had lost insurance coverage from another manner, usually no fault of your own, you might get a 63-day special enrollment period to purchase without underwriting. You know, if you were somebody who had moved to Massachusetts, Minnesota, Wisconsin, you would get that 63 days. But for the most part, you had that 6 months, and then that window kind of closed for most people. This new law allows for an additional open enrollment period for the Medicare supplement policies. It gives Medicare beneficiaries who have a Medicare supplement policy, it gives them 30 days after their birthday to switch policies, but it has to be defined as equal or lesser value. And so this consumer advisory goes into the details about what is equal or lesser value. There is also a matrix posted as well that will show you exactly what is equal or lesser value. Now, all that information is on the website under the Medicare supplement right now. And like I said, I'll go over it in more detail for consumers in the presentation on June 20th. For right now, I am going to put this link, if you want to grab this and read it in its entirety, I'm going to put that link in the chat box for you. So other than that, you know, just scroll through here for all kinds of information that is specifically designed for consumers. And we're trying to meet you where you're at. If you're somebody who likes to read that information, there's a brochure for you. If you prefer to read a frequently asked question, usually there's a frequently asked question list available. If you're somebody who wants to watch videos or webinars, we have those too. And we have most of those for most of the topics. We're trying to cover everything, but we're trying to meet you where you are in terms of how you prefer to get consumer information. And so with that, I just wanted to show you guys the website real quick, and I will send this back to Thomas.
Well, I want to thank Patty and Kiana for presenting today. You shared a lot of important information. If you have additional questions, please email them directly. Their email addresses are in the chat box. And if you'd like to review the information presented today or share this webinar with others, the recording of this will be put on our website in the next few days. You were just on the website with Patty. It's insurance.maryland.gov and look for webinars there. Also, if you'd like to sign up to receive emails for upcoming events, you can do that on the website as well. On the main page, just scroll to the bottom of the page and there's a spot to enter your email address and you'll be put on the e-newsletter mailing list. Our next Lunch with Mia is on May 22nd, and that event is in Spanish, and the topic is mental health and heart health, which we did in English a few months ago, and so that's already on the website. So I hope to see you again at a future MIA event, hopefully on June 20th, where Patty's going to present again, and I hope you all have a wonderful afternoon. Thanks very much.